Hey folks, sorry for the technical issues today. This is the second live stream today that went bad. One my fault, one YouTube's fault. But hopefully the third time's a charm. So what we're going to talk about today are a bit of headlines out of China. They were very busy this weekend with their headline pushing and their currency manipulation. We're going to talk a bit about the US dollar. It did trade a while last night, and it wasn't pretty. So we'll take a look at that chart in a moment. We're going to go over the economic data that was released last week and what that means for the US dollar and what economic data is coming out this week. So let's begin first, folks, with a shout out to our sponsor, and our sponsor being our friends over at TrendSpider. Folks, you need to automate your grunt work in this day and age so you save time and improve your accuracy using automated technical analysis. Reduce your costly analytical mistakes and time your trades with precision by using their trade alerts. I'm going to be using their alerts later on in this commentary, setting up my week for our watch stocks. And our watch stocks are going to be, well, I remember this, EXPE, CRWD, NVDA, AB&B, and Rent-A-Center. Oh, and I have, for Anthony out there, I have XOM. That's a member stock chart request. We're going to go over that as well. So, folks, before we leave TrendSpider, there's a link below. Don't use my discount code. Why? It's Memorial Day. And they have not a 35% discount like I get and I give to you folks, but today, and only today, they have a 45% discount on their plans. So head on over there, take a tour, click the explore the product button, watch the demo, and start your 7-day free trial offer. Use the link below; it'll take you over there. But use their checkout code, whatever code they're using today. I don't know what code it is, but they'll prompt you on the way out to get that discount. Again, 45% off. So hurry. All right, let's get to it. Let's talk about... Hey, Denny, thank you for letting me know about that sound issue. I appreciate that. Yeah, I guess it was lucky because I was a lot further along in that first video, and I didn't know I couldn't be heard. So thanks for bringing that to my attention. All right, so let's get to it. So over the weekend, the currency war returns. This is off of Zero Hedge. I'll share this article. You can read it in depth later on at your leisure. And happy Memorial Day to everyone. Many prayers to our fallen heroes. So currency war returns. Not that it ever really went away. It quieted down quite a bit. But China hikes FX reserve ratio for the first time in 14 years. So it looks as though the Chinese are doing what we're trying to do. They're more in debt than we are. So they're trying to inflate away their debt. Plus, they don't want us inflating away our debt because they're going to be paid back in US dollars that are worthless. So for the brief time that the dollar was open yesterday, this is Bitcoin. Bitcoin's surging right now. We'll come back to this chart. We'll talk about it. The equity futures are closed right now. But I want to go over to the US dollar. And this is this is the 9 a.m. bar, 4-hour chart, the 31st. Oh, today's the 31st. I thought it was the 1st today. I thought it seemed odd. I know the futures market wasn't open at 9 a.m. on a Sunday. Okay, so the dollar got ripped apart today. And it is open right now. Look at this drop here. You know, you go back to the 4-hour chart, and you have a massive, massive head and shoulders setup. Left shoulder, head, right shoulder. I mean, this is a classic breakdown on the US dollar. This bar should close at 1 p.m. Eastern Standard Time. So this is the picture perfect textbook definition of a real serious breakdown on the US dollar. Next stop is going to be down here at this support level. If it breaks, we're going to take out the lows of the 25th. Let's take a look at Bitcoin. Bitcoin making a nice move back here. We've been consolidating since the 19th. Looks like we're going to get a rally here. Next stop on Bitcoin around 41,000. I would imagine if we're able to keep this momentum going. You'll know that we're going to that 41,000 mark if we're able to get through. Let's call it 39.5. 39.5. We're at current. We're at 37,480 on Bitcoin. So this is going to be real serious resistance on Bitcoin. And if it fails, here's the support level to watch. So, me personally, I wouldn't be a buyer here. I would watch and see whether or not we got the breakout, or do we fail? Do we roll over? We're still making lower highs. We haven't broken out to higher highs yet, so I would be cautious of Bitcoin. Looking good right now. I'm sure it's light volume on Memorial Day. Hey, Jody. Happy Memorial Day to you, too. Thank you very much. Let's take a look at gold. Gold up on the session. Very thin trade here. We are holding above that 1900 mark on gold. Now, the thing to remember, I'm surprised gold isn't stronger right now. It'll probably strengthen up as volume comes back in this evening, especially when Asia opens up. Because that breakdown on the US dollar, a tremendous gut punch for the US dollar today. I don't know why I was thinking today was the first. So we're long of gold stocks, we're long of silver and silver miners. So I remain very, very bullish on this space. I mean, when you take a look at gold and how it behaved, you know, it's really a tale of two charts. We'll use the GLD. And here's the dollar. All right, so on Friday, we had economic data that came out. That's this coming week. Oh, this week is non-farm payrolls. We had the PCE. That's the Fed's favorite measure of inflation. It came out last week, and it was not wonderful. And the immediate knee-jerk reaction of traders was to buy the dollar. And it sounds counterintuitive. You know, why would you want to buy the US dollar? Why would you want to sell gold? Which was the reaction, of course, initially, because they dropped gold down on the news. And the reason is that, you know, what traders don't get yet, and what CNBC doesn't get yet, and that's really where I differentiate myself between the Mockingbird media and the way I see things. I'm more in the Peter Schiff camp of viewing this economy, And when I see an inflation data or a metric come out and it's very, very hot, and I know it's at the Federal Reserve's favorite measure of inflation, I'm not buying dollars, I'm selling dollars. But traders are trained to buy the dollar because they think the Federal Reserve is going to raise rates to fight inflation. They're not. They've already told us they're not raising rates. It ain't going to happen. They want an average of 2% inflation. They changed it from a target of 2% inflation to an average of 2% inflation about a year and a half, 2 years ago already. Why they don't get this, I don't know, but I think they're starting to get it because the knee-jerk reaction, and maybe it's the algorithms for all I know, that did this, the knee-jerk reaction was to sell. Let's do it. Go to an intraday chart, 15-minute chart, going back to Friday. They sold gold at the open, and they rallied. This is the dollar bull ETF, 15-minute chart. They rallied the US dollar. Why? Why would you do that? So it didn't take long for traders to realize they're not raising rates anytime soon. You got to buy gold. You need to sell the dollar. And the main reason why they're not going to hike rates is that, A, we're raising interest payments on ourselves. 2, the stock market will just absolutely collapse. 3, they're not going to allow a stock market correction or collapse in advance of the midterm elections. It's not going to happen. So for anyone out there holding their breath for a Fed rate hike, you got to stop. Because if you go back to the FOMC minutes from last month, there was one line that made the market get all a flutter, and it sold off gold. And all the line was, it says that in the next several months, we may meet to talk about a possible plan to begin rolling off debt off our balance sheet going out a couple of years. I mean, it was a nothing burger. So, folks, by the end of the day on Friday, going back to the daily chart, that initial burst in the US dollar had reversed itself, and we did close flat on the day, right? Flat, or just we closed up 2 cents on the dollar bull ETF, basically flat. And gold had flashed a reversal bar to close up on the day. And I think that we are going a lot higher from here. We are in a very seasonally favorable period of time. I'll take you over to, we're long at the GDXJ. We'll use the GDXJ. These are the junior miners. And I'll share with you the seasonality. You know, this is data that goes back 12 years. And you could see May is already closed out. Yes, it's the 31st. But tomorrow is the first trading day of June. And we're up generally 55% of the times, 64% of the times in July, and 80% of the times in August. It was August of last year where gold made a new all-time high. It didn't stay there very long, but in all probability, we're going to be there before this coming August. So, long story short, the seasonality factor is really helping gold right now. So if you're worried about gold this time of year, it behaves very, very strongly. You bring up a chart of the US dollar, it's the exact opposite of what you're looking at right here. So seasonally favorable for the gold miners, unfavorable for the US dollar. Now, when you take a look at how gold closed out the month, I mean, this is just awesome. This is awesome. We had a major breakout on a monthly time frame in May. Next price target is 183.49 on the GLD. So we're loving this. GDXJ, beautiful breakout. We're going up higher. I have a price target here of $60 in the short run on the GDXJ. We're also long of the NUGT. This is a leveraged ETF that puts you long of the gold miners. But I sold covered calls expiring on the 25th of June at a 90 strike. So if you take a look at this chart here of the NUGT, why they would sell off gold on Friday initially is bizarre to me. You take a look at this chart here. You have a higher low on the NUGT. You have a breakout out of a triangle formation on a monthly time frame. And it looks as though all we're doing is going up higher. So I do plan on, because I don't want to have NUGT called away from me. I want to stay long of it. So what may cause me a problem here is that if we gap up higher this week, I won't have sufficient time decay on those 90 strike call options expiring on the 25th of the month. So I may need to buy more NUGT. Not that that's a problem. I'll probably buy more anyway. But then I'll roll out to the following month, maybe to the 110 strike without losing any money. I'll break even on buying back those options and rolling out. But I'll at a bare minimum, I'll go up to the 110 strike price if I have to wait 60 days. At a bare minimum, that's where I think we're going to be going. So NUGT looking very good. We're also long of the silver miners, SILJ. Folks, take a look at this. Here's the beauty of automated technical analysis. Click of a button. If you're just joining in, use the link below. Go over to TrendSpider down below. Do not use my discount code this week anyway, because they're having a 45% discount for Memorial Day. So take advantage of it. Okay, back to SILJ. We broke out on a monthly time frame. Now, here's a way that you could put a strategy in place to open a position or add to one. Look for a retrace back to the lower band of now support. Was resistance. It should now act as support. And I want to know if we break through. God forbid. Folks, we're going to go to in a minute to Expedia, CrowdStrike, NVIDIA, Airbnb, Rent-A-Center, Exxonmobil. I'm going to keep this active for 15 days, and we're good to go. And that support level, is it around, let's call it 1760, thereabouts? So these are the names that we're looking at adding to. Now, what are we looking to open besides the watch stocks? We're looking at EDC, emerging markets. Take the automated trend lines off for a second. What happened last month? A bullish key reversal bar. Very powerful. With the dollar dropping as it is right now, that is bullish for emerging markets. Certain emerging market names are actually raising rates because their economies are getting so hot. Why? They're commodity exporters. And the beautiful part about the dollar dropping in value is that their debt, which they have a lot of, is denominated in US dollars. So their economies are in fuego. They're exporting a lot of commodities. And the debt that they owe is being diluted due to the fact that they're paying back in dollars that are becoming less and less valuable, like toilet paper. So this bodes very, very well for emerging markets. And if you bring up the automated trend lines, take a look at this upper band of resistance where we're closing in on at current. You can see that we've hit it. We hit it back here. Back in, I don't know, this bar's in the way here. Anyway, you can see that this line in green has acted as resistance. Now we need to close above this. So what I'm going to do is I'm going to set an alert here because I want to know, forget about sensitivity, I don't want any. All I care about is a close above this resistance level. I'm going to keep this active for about 60 days. Now, when else could we buy here? Well, let's drill down to a weekly chart. Our monthly alert is set here. I think that if for whatever reason, Mr. D, yeah, we can go over space. If for whatever reason we pull back, you could even use this support level here at 94.58 on EDC. Touch, bounce. We'll keep a little bit of sensitivity. And we'll keep this active for 14 days. And we're good to go. And technically, what happened last week is that we broke out. Right there. So if you wanted to scratch the itch, of which I just might, and get long here, is on a retrace. I'll give you a number in a moment. Back to weekly support. Because it was resistance, it should now act as support. And there you go. That number would be at around, is that right? Yeah, at about 103 per share on the EDC. So emerging markets looking good. This is a broader basket. I'm loving Brazil, huge commodity exporter. Last week, it had an outstanding week. It broke out, in fact. Look at these Bollinger Bands, how tight they are. So you have the potential for a Bollinger Band squeeze, weekly time frame, loving Vietnam. Vietnam broke out last week. This is the VNM, the symbol, VanEx Vietnam ETF. Beautiful breakout. Let's watch for a retest here. This is where the next bull market's going to be. Commodities, commodity producers. That doesn't mean that we're not going to have some rallies in the high beta growth stocks, but that's the old bull market. What we've seen in the past couple of months is sector rotation. And I'll bore you with one other emerging market play that I really like. And that's India. I think that where China has dropped the ball with this COVID and many other things, their bully tactics in the South China Sea, their bully tactics with the Australians. Uh, the countries that are going to capitalize the most on the supply chain disruption are going to be India and Vietnam. Maybe Malaysia, but maybe Philippines. But I like Vietnam. I like India. I've been saying that for the longest time right now. And we broke out. I'll take the automated trend line off. And you can see that we broke out last week on India. So Vietnam broke out. EDC, the emerging market baskets, broke out. Brazil broke out. This is where money is rotating into, not high-tech beta. Now, speaking of high-tech beta, we'll go over to Virgin Galactic. I know they had a couple of good weeks recently. Really good weeks. Now, the key to remember here is that we're approaching resistance levels. We've had two huge back-to-back weeks on Virgin. Let's first go to a monthly chart to get a feel for how we closed out the month. It was a monster month. I mean, wow. But here is the Rubicon. And what I mean by the Rubicon, I mean that is the line in the sand. Let's call it $35 a share. Yeah, $35 a share. It was support back here. Why is this open? This toolbar won't drop down. Whatever month this was here, it acted as support. It broke down. Now last month it acted as resistance. So watch for a retrace on Virgin. Here's that resistance level yet again. I would love to see a shakeout in the market. And the great part about Virgin, it's the great part and it's the bad part. It's very, very volatile, not for the faint of heart. So if by chance it happens to retrace, which is totally conceivable, back down to a support level, and the alert's set. Let's go to a daily chart. Yeah, I think you're going to get a pullback here, Mr. D. We had a bearish reversal bar on Friday. Watch for your retest. This is probably going to be one of the last good opportunities to get long of SPCE. And I'm not saying go jumping in with both feet. I'm a huge advocate right now of staying very, very small with these high beta stocks and buying when there's opportunity, buying when there's a retracement back down to a support level. And again, it's entirely possible that we retrace because we got extended, we hit resistance, we also hit the third standard deviation Bollinger Band. It got ahead of itself. No big deal. Allow it to pull back in. Don't let emotion dictate your trade. Allow it to come to you. That's why I use the trade alerts to keep you out of trouble. Okay, let's go over our watch stocks for the new trading week. Expedia, first up. A really nice breakout above a volume shelf last Friday. But first, let's go to a weekly chart. In fact, let's go to a monthly chart. Let's take advantage of the month now being closed. Hammer formation. They couldn't close it positive. But they did close it well off the lows of the month. 167 critical support. Weekly chart. Nice breakout last week. Above resistance. Now the question is, where do we want to enter this trade? What's the best risk-reward entry point? And this is where this becomes a bit more of an art than anything else. I like two places, actually 3 places. But I'm only going to set up 2 alerts right now. And I think that we could use, what's this price here? 175.90. Yeah, this is the same volume shove. So let's set up an alert here at this volume shove. What we're looking for here is a retrace, and it's not too much to ask. I mean, we closed at where? Closed at 176.95. I mean, we're right there. We're just a few dimes away. So we're creating an alert, touch bounce, a little bit of no sensitivity. Forget that. Let's get notified pretty quickly. EX. Now going to the daily chart, it's a and/or situation, right? We could open up a position on a retest if that happens. We may not get that. So we could scratch the itch here and add on a breakout, or if we don't get the retest at the support level, we could open on a breakout. I'd be okay if, you know what, if we opened up flat on Tuesday, scratch the itch, and get long with a market order. But I would wait until later in the day. I don't like opening up trades in the morning. Now I'm going to set the breakout up because a breakout above this resistance level would have us getting very long. So our alerts are set. Open on a pullback, add on a breakout. Or if we don't get the pullback, open on a breakout. Now, taking a look at seasonality going back 12 years, this is a pretty good time of year to be buying the shares. June up 72% of the time. July up 72% of the time. August is an absolute nightmare. Great place if you book profits in July. Look to revisit at the depths of the lows in August if the chart's set up that way, because then you get a nice recovery in September into October. So a seasonally favorable period of time through July. So Expedia looking pretty good as a long. Next chart up, CRWD. Check out the monthly chart. My alert triggered, but we did not close above resistance. Therefore, we did not enter the trade. So we're going to change this, or we're going to remove it and reset it. In fact, I'm not going to use the monthly chart. We're going to drill down to a weekly chart. Now, the weekly chart's showing that we have nudged above a resistance level. We're looking for a retracement to retest. What was resistance should now act as support. CRWD, our alert is set. Daily chart, I just want to see how we behaved on Friday. A bit of a reversal bar on Friday. Watch for the retrace. I think this is a reasonable expectation that CRWD come back in and retrace that weekly breakout point. And again, what was resistance should now, if this is a healthy stock, and it appears to be, should now be support. We had some really great price action on Wednesday, and even better on Thursday. Look at this bullish key reversal bar. This is textbook bullish key reversal. I have, in the link below, I have a 5-part video tutorial. It's free for my 5 top favorite candlestick patterns. This bullish key reversal is one of them. So it's free. Go check it out. So CrowdStrike looking awesome. Moving forward, let's check out. There's not enough data here for seasonality, right? I don't think that there is. This is not that old of a stock. Yeah, there's no data here. You can't use 2 years worth of data. NVIDIA. They reported earnings last week. Let's see how they closed out the month. Beautiful. I mean, again, another textbook bullish key reversal bar. Support at 626.70. I'm going to set an alert here on a retrace. Keep a little bit of sensitivity. We're good there. Daily chart. I can't chase it here because the automated trend lines are telling us that we have resistance right here at 666.79. Where do we close? Too close for comfort to buy here. I want to see a retracement. We may not get it. I may miss out, but we're not going to chase the stock. The next chart up, A, B, and B. A, B, and B I like as an options trade. We don't buy options here. We like to sell them, generating cash flow. Airbnb has gone through a pretty hefty correction. You take a look at a monthly chart here. I mean, it's been decimated. So what I like about A, B, and B is that on my screeners over the weekend, not that Airbnb popped up on my screener. It did not. But Expedia did. A lot of travel-related stocks have been popping up of late. So while beta, your high-tech beta, is kind of out of favor right now because yields are flirting with a move higher, your reopening trades, your travel trades, airlines should soon be doing well. Those are beginning to look more appealing. And the revenue growth on Airbnb is very, very strong. One of the top revenue growers out there. So I like it from a long perspective. I would like to sell naked puts. I know some of you hear puts and you're thinking he's bearish on the stock. Why is he talking bullish? No. When I sell the put, I'm generating cash flow. I'm opening a bull play. So if you're wondering who you're buying, if you buy put options, who you're buying put options from, you're buying them for guys like me. I'm selling them. So we're acting as the casino and selling, generating cash flow, and it provides us with a discount on the share price if it's assigned to us. So where might we open up a strike on Airbnb? I like the 133 strike right down here. That gives us a big discount if assigned to us. Weekly chart. We had a nice move up higher last week. We did close off the highs of the week. I'd be in no rush to sell a call just yet because this is a volatile stock. It could get squeezed higher on a big counter trend move. So I don't want to sell a naked call here because I might have my face ripped off because technically that's a bearish play. So we don't want to open up that end of the trade yet. Or if the setup just happens, I might just buy some shares and sell deep out of the money naked calls. That way I have exposure. And maybe if we see some weakness, I will have those shares assigned to me and willingly assigned to me. So Airbnb looking good. Daily chart. Got a little bit of a fade on Friday. This is going to come in a little bit. So I think my alert is set properly here. This is an expired alert. Let's renew this. I'm going to leave some sensitivity here. A, B, and B. And we're good to go. So what we're doing right here is we're setting up our week. When the alerts fire off, we'll entertain executing a trade. So we're not going to chase anything here. We're not going to hope and we should fear, because hope is not a strategy. Our strategy is we use a rules-based approach. If this, then that. If our alerts fire off, we revisit it. If it looks healthy, if we have good volume, we're closing strong, then we open up our trade. So Airbnb, I think we're good to go here. 2 alerts set up. That's what I generally set up. We're not going to go over seasonality. Not enough data here to use seasonality. We're going to move on to Exxonmobil. And this is a chart request from one of our members, Anthony. Let's see how we closed out the month. Bad month. It was up, but still not a great month in terms of topping tails. No bueno, man. $63 is stiff resistance. $57.50 to $55.50, strong support. Weekly chart. We broke down last week. You can see I have an alert that fired off. We broke down last week. So at a bare minimum, you need to hold on, assuming that they don't gap it up on Tuesday, Wednesday. If they don't gap it up and close it above 58.62, we're coming down here to 57.56. Will that hold? We don't know. We're not that smart. All right, so we'll set up an alert here. And rather than just simply doing a touch bounce, I also want to know if we break through it. And if that fails to hold, we're looking at a retracement down to, I could use 55.50, but you know what? I like this support level here as well at 55.80. You know what? I'm just going to use 55.50 and keep some sensitivity on. We'll bring it down to that 55.80 mark. There you go. We're good. Touch, bounce. I also want to know if we break through. We'll keep this active for a couple of weeks, and we're good to go. Seasonality. We certainly have enough seasonality here to analyze this data. June is a decent month. It's up 55% of the times. That, however, is the summer is truly the doldrums for Exxonmobil. We're up only 27% of the times in July and 20% of the times in August over the past 12 years. Let's pull back. Let's bring in even more data. Let's go back to 1980. A lot's changed. The summer used to be an okay period of time. That has now changed. So over the past 12 years, we're going to have what you call a recency bias, right? So we're going to use the most current data for seasonality. So we're going to make the assumption that July and August are going to be weak months. I'm not looking here to get aggressively long into Exxonmobil. I may, though, take a look at Exxonmobil using a seasonality scan during the summer. If we do get a sell-off and look to open up a trade in August, that way we can enjoy a recovery into the autumn. Because in September through to December, the seasonality improves dramatically. RCII, this is another watch stock. ExxonMobil is not a watch stock for us. It is a members chart request. Why can't I type? Rent a center. Let's go to a monthly chart. Here, take off the monthly automated trend lines. Look at this. Beautiful, beautiful breakout back here in February. Retest 1, retest 2, retest 3. Bullish reversal bar. Poised for continuation move up higher. Weekly chart. We broke out last week. On this weekly chart, I'm going to overlay monthly support, as noted below, and draw weekly resistance. And there's your breakout. So what I want to know is if we pull back and we do a retest. And we'll keep this active for, we'll go with 2 weeks. Volume was good. Rising up volume, good stuff. It's under accumulation. Daily chart. Now the daily chart was not wonderful. You could see that on Friday, they did a retest of the breakout point. I'm looking for one more move down here and a firm retest of support. Let's take a look at seasonality. We've been using 12 years. Let's go with 12 years again. Seasonality is fair. I mean, it's nothing wonderful in June and July. It really drops off bad in August through October, then picks back up in November. So RCII looking good into the new trading week. And hey, Gay, how you doing, man? BB? It's trading along with the other meme stocks. Monthly chart. Big topping tail, wick, shadow. We'll call it a cupcake. It doesn't matter. This is bullishness. It's telling you, BB's telling you that you have a lot of sellers up at $12 a share. A lot of sellers up there. Weekly chart. Closed up on the week. We held the 953 mark. That was support, or should be support now. So if you're looking for a support level to open up a trade here, I'd set up an alert at the 953 mark, 955, leave a little bit of sensitivity. You'll probably get that retrace because on Friday, it was not a wonderful day. You had a bearish key reversal bar. I think at a bare minimum, you're coming down to that 950 mark. So allow it to come to you. I think you'll get it. Seasonality. I don't know how much, now that we have meme stocks, that seasonality comes into play. June is the worst month of the year. Going back 12 years. There's a lot more data here. Let's bring it in. Going back to 99. June is not a good month. Going back 22 years, that's all the data that we have. June is the worst month on record for BB, both on a 12-month and a 22-year view. So I would be very, very cautious about getting along right here, right now. You're very welcome, Mr. D. Thanks for joining in, man. All right, we'll leave it off with CMG, Chipotle. And if I could ask you folks, if you could please smash that like button, I'd really appreciate it. It helps me out with the YouTube algorithm. All right, so Chipotle last month did not have a good month. In fact, it was a pretty poor month. Thanks for those likes. I appreciate that very much. Thank you very much. You have real serious support that it really must hold at 1296. You can see that back here, it was resistance. Then here in March, it was support. Attempted breakout, failure last month. Weekly chart. I'm not in love with it. You're right at resistance at, what is that? 1381. What was the high? 1381 last week. We closed at 1371, nearly 1372. Too much risk, not enough reward here, unless, of course, they gap it up and they close it above the 1381 mark. Daily chart. Yeah, I would avoid this. I don't see the rush. What I would do, if you're really interested in getting long, because I wouldn't short it yet, I'd set an alert and wait for a breakout. It's a show me stock. It's got to show you that it's worthy of your investment dollar. Right now, if you bought it right here, right now, you'd be using hope as a strategy. And you know, if you're watching me for any length of time, hope is not a strategy. It's a recipe for disaster. So we want to use a rules-based approach. This is how you avoid getting in trouble. Set your alert and forget about it. The more you look, the more you rationalize, the more you get into an impulse buy situation. You don't want to do it. And long entry on close. We want to make sure that we don't get a gap up higher above resistance and then fade by the end of the day. No. At 3:59 Eastern Standard Time, we'll be watching to see whether or not do we close above resistance. If we do not, even if it was there earlier in the morning, forget it. We avoid like the plague because that's a failed breakout. So no great rush here. I don't think I went over seasonality, but let's take a look at it. July is a massively good month. June is good. July is the best month of the year. So the seasonality is in your favor through July. August, the floor drops out from underneath it. Wait for that breakout on Chipotle. Or a retracement. Here's what the ideal situation would be. Is this. Here's your downtrend channel. Right? There it is. Sloppy, but you get my drift. So this should be the left side of your W in conjunction with this line here, which is the pivot point, the center line of your W. Now what you want to see is a pullback and a higher low get put in or a retest of prior support without breaking support. I can't draw that line for you yet because we don't have the history. I can do this. You want to see it pull back, dance along this line, and then buy on a higher low, scratch the itch, use a stop loss right below this prior low, and then add more on a breakout above resistance where I just put that alert up. That's how I would play this. Or if it breaks out, where we have our alert set at current. So no rush. And RSI is rising. That's a good thing. And with that, folks, everybody, thanks for joining on this Memorial Day. Many prayers out to our fallen heroes, our veterans, and God bless everyone. And I will talk to you throughout the week. Have a profitable trading week. Be well.